What is going on, YouTube? And welcome back to the Trader Shop with me, T. Hobbs. Of course, you know we are back with another edition of the top-down market analysis. Now, before we get into this top-down market analysis, I do want to say thank you guys so much on the channel. We have reached a milestone of 700 subscribers and counting. You guys have been showing your support, and we really appreciate that, myself and Jay Seals. So we wanted to make sure we say thank you for that. And don't forget to keep tipping the barber, aka hitting the like and subscribe button. Now that we got that out of the way, let's get into the business of things. This week is going to be interesting. I mean, the last 3 weeks, I got to admit, you know, God's been on my side. Market structure's been on my side. We've actually called the market almost perfectly the last 3 weeks. So I'm going to try to continue that streak. And if these levels are helping you, please make sure you drop a comment down below and let us know what you think. So let's jump right into it. Today's date is February the 11th. So I always like to start with news, right? And usually, like every Monday, there's not really big news. And I really honestly don't care about Monday and Tuesday. So let's just skip forward in time and let's go right into, actually, I do care about February 13th. February 13th is Tuesday, and it's core CPI day, right? This is going to be the day where all of the volatility comes into the market. You can look for areas that haven't been retested, and we'll go over those on the chart. Areas that haven't been retested to be ran through, stops to get hit, market clearing liquidity only to go back to the direction that it really wants to go in, or complete wreckage. We don't know exactly what the CPI data is going to come out with, but I can guarantee you, whatever the CPI data is, the market will be reacting to that. All right. So I don't really care about news. I care to put it out in my market analysis videos because fundamentally it is what drives people to buy or sell. However, it doesn't really hold weight in how I make my decisions in regards to my trading. So on Wednesday, again, another what I would call a nothing burger type of day. We have an FOMC speaker, and then we got crude oil inventories. For if you're trading oil, that's important, but for the market, not so much. All right. And then we go into Thursday, February 15th. I hope I got my days right. But core retail sales is always a big day. Empire State Manufacturing Index, always a big day. Retail sales and unemployment all coming out at 7:30 prior to market open. Those are going to be really big days. Probably in the Discord, we'll probably try to put out some plays in pre-market to try to take advantage of these situations. Again, we don't care about the news in the Discord in our community. We care about market structure and what structure is telling us to do at that time. The news just allows us to make our money faster. That's all. So moving on, we end the week on the 16th with core PPI, right? PPI is going to be big again. Whatever these numbers are, they're going to drive the market. They're going to fundamentally drive people to buy or sell, right? Everything else is up to us as traders to figure out via market structure. Speaking of market structure, let's walk our way over to my other tab and let's jump right into the NASDAQ and the S&P 500. We'll start off with the NASDAQ because I know it's the most popular instrument. Most people on Twitter, social media, they love to trade the NASDAQ. Me, quite frankly, I don't care which one I trade. I prefer the NASDAQ because I can have more opportunities to make money, but ES moves basically exactly the same. As a matter of fact, here's a side-to-side picture of the NASDAQ versus the ES on the monthly chart. And you can see they literally move exactly the same. There's no difference. The only difference is the speed in which they get there. All right. So let's go over to the NASDAQ. And we're looking at the monthly on the NASDAQ. And if you tuned into last week's top-down analysis, then you're familiar with this picture. I took a lot of the demand zones down. I got pretty much rid of everything, pretty much a fresh start. But where we were last week was, excuse me, Friday, February the 2nd, 2024. We were sitting at 17,775. And on that video, I specifically said, if we come down, I don't expect us to go down much further. As a matter of fact, I expect us to bounce off structure because we were range bound at that time. I was expecting us to get into the 18,000s plus some change is what I said in the video because I went back and watched it. I always do before I film. So we ended up getting into 18,071 exactly. Didn't have the exact number. Nobody does, right? But I had a really good idea that we were going to continue to push. And the main reason was because we were looking at the macro. The monthly chart shows us a very large cup and handle formation. Call it a cup and handle, call it whatever you want. At the end of the day, here's what happened. We had a high here at 17,674. The market traded down back into this low on the monthly. We pushed up above the high at 16,487. We broke this high, which gave us momentum to break this high. And now we closed above this high. Therefore, once we close above a major high on a monthly, it does the same thing it's going to do on the 15-minute, the daily, whatever. We're either going to continue higher, consolidate, or we're going to come back down to retest some of these lows that we just crossed above. As we start to get a little bit closer to price, you'll understand exactly where those lows are. So let's drop down to the weekly. All right. If we come down to the weekly, what I like to do is I like to put a Fibonacci retracement on the previous close of the weekly candle. So I'll take from wick to wick, right? And I only use the 50% on the fib, which puts us right at about 17,813.25 on the fib. That is smack dead in the middle of price for the week, right? As we come down to the daily and the 4 hour, you'll understand why this area is going to be of great importance, right? The only thing to note on the weekly that we didn't note on the monthly is there's more detail in the weekly, right? Instead of 4 weekly candles, we have 2 weekly candles that are identifying where we are in price on the monthly, right? The weekly candles are setting higher highs. They're setting higher lows. So there's no reason to believe that this uptrend is going to fall anytime soon. Not to mention, I guarantee if I pulled up volume, which I don't even look at it anymore because I don't care, right? But I guarantee if we look at the volume, just looking at the candle, I can tell that not only was this a strong weekly close, but we barely had any selling, right? From the base of this candle to the top of this wick, there was barely any selling. All attempts to sell 50% of this weekly candle were eaten up immediately, right? That tells you how strong these buyers are. And if you look at some of the Magnificent 7 stocks, it'll tell you why we're this strong. So let's drop down to the daily, right? So if you look over here at the daily, right, we can see that 50% Fibonacci retracement on the weekly acted as support on the daily candle, right? And you can see we've used it as support. We basically projected right off of it, right, and pushed up to higher prices. So what do you think is going to happen now? If we continue forward, it means the bulls are extremely strong and there's no intentions of coming back to retest, right? However, what's more likely to happen is after we break above a major high, we consolidate down, right? So we come down, we get something like this, or we push up, and then we get an attempt to go higher, we fail, and then we consolidate down back into structure, right? Whether that be on the 90-minute, which I have here, and I'll share that area with the Discord. And also, or that may be we sell down into the 4 hour. News will help propel this selling back into structure, but it doesn't drive price action, right? It starts price action, but it doesn't drive price action. I want to make that very, very clear. All right. So on the daily, nothing really significant to note. I think all of the information that you're going to pay attention to in regards to what to do next week is on the 4 hour, right? And on the 4 hour, you can see, just like we just talked about on the daily and the weekly, when we break above a high, we go into consolidation and or we pull back. Well, if we look back here where price was before on last week, we consolidated, then we sold down. We consolidated at this low, and then we finally broke above this major high. And what did we do? Consolidated. If you were looking at your daily P&L during these days, you were probably getting wrecked thinking we were going to go higher or lower, but instead we consolidated, right? As soon as we came out of this consolidation, we waited till Friday and the market went crazy, right? So what do you think is going to happen this week? It's not going to be any difference. The only difference is there's a big news candle, probably 2 or 3 of them that are going to show up this week. Whether they take us higher or they take us lower is really not up to us. Our job is to read the price action, be prepared and anticipate the price action, and then attack the price action as we see it, okay? So on the 4 hour, we got that level at 17,879.50, right? And then below here, if we start breaking below Friday's low, then we got structure at about 17,683.75 to the downside. Now, to the upside, here's where it gets a little tricky, right? Nobody truly knows where we're going, but only thing we can do is base our principles off of what we have already seen. What we have already seen is the market be extremely bullish, right? This candle in particular, however, leads us to believe that there's a potential, I'm gonna repeat that, a potential for price to start reversing. Why? Because this candle is what they call a gravestone doji, right? You can call it a gravestone doji. You can call it a rejection candle. I don't care what you call it. Only thing you need to know is when we came up on this 4-hour candle, unlike the rest of the 4-hour candles, bears actually showed up. Will they continue? I don't know. The market likes to sell off getting ready for CPI, and that's something that the market could do, but it's not something that the market has to do. Therefore, we just play structure, right? If we hold below this level, we break down below 18,030, we will look for retest to confirm whether or not price wants to break above this high. If it breaks above this high, then we can play price action accordingly. If it doesn't break above this high and we fail, look to get short on the break of 1830, not at 1830, allow it to push back up and then start to trade the market down to 17,969, from 17,969 down to 17,879. To the upside, hey, it's anybody's guess. If you understand market structure, if you don't understand market structure, the link to the Discord is in the description down below. I'm not going to use this video to explain you market structure no more than I already have. So that's the breakdown for NQ. So let's switch over to ES, see if we can't gather some levels over on ES. All right. So this is ES. This is the monthly view. Again, like I told you guys in the beginning of the video, there's no big difference between ES and NQ. All of the structural stuff that I said about NQ applies to ES. All right. So let's drop down to the daily. We'll skip the weekly and just know that I got my Fibonacci retracement from the weekly, right? So that level sits at 49.9350. That is the middle, smack dead middle of the weekly candle using the Fibonacci retracement, right? So 49.9350, if we start to sell off, will be kind of like the area where we'll definitely be looking for a huge move back to the upside, right? All right, so last week, where were we? February 2nd, 2024, 49.97. This one I'm really proud of because it was the strong thesis that I had for NQ to reach 18,000. My thesis was that ES hadn't reached its all-time high with B adjustment on. I had been talking about it for 3 weeks. That level was 5028, right? Because ES hadn't reached its all-time high, I felt like ES strength to get to all-time high, i.e. get SPY over 500, get ES to 5028, would be the reason or one of the reasons that would catapult NQ to a new all-time high because of the fact that ES strength would push NQ. And that's exactly what happened. We actually ended up, I said in my video, again, I always go back and watch my videos because I want to know how my accuracy is. My video, I said, look for price to trade back into 4938. And I'd be darned if we didn't hit 493850 right on the dot. That's me bragging a little bit, so I'll move on. All right, so if we come up on the daily, what do we see? We got to push above the high. We expect price to trade back down into this high or consolidate at the highs and trade back above it. All right. No levels for me. Again, there's some things that I did see on the tape, but you got to join the Discord if you want to know what those things are. Because right after this, they're all listening to me right now. Right after this, I'll go back to the Discord and I'll share with them a bunch of things that I'm not going to put on this YouTube video. All right. So let's drop down to the 4-hour. The 4-hour at 5117. This level was absolutely key for Friday's price action. Why? Because we broke a high, we consolidated, refused to go lower. So when we broke above this and pushed back down, there was almost a 100% chance we were going to bounce off this level and keep going higher, right? Again, we got that same candle structure right here on ES that leads me to believe that there are some sellers here, but that they're not that strong because they didn't accomplish anything. All right. So levels you can look for on the way down. If we hit 90-minute demand zone, look for 5034. I believe 5034 down to about 5030 is the level. I mean, 5024 is the level for that 90-minute demand zone. If we trade past that level, look for 501725 through roughly about 5008 to the downside for potential bounce. Just like I said on NQ, if we get below Friday's low, look directly beneath you because there's the 50% retracement and all of this consolidation that we set in, right? So just be careful if you're going to be shorting down here, especially if CPI gets crazy and it's bad and people start selling. Now you're trying to be a seller, not realizing where you are structurally. All right. So I hope that gets you guys all geared up. I will say one more thing in regards to catalysts upcoming that you should be aware of. The last thing that you should be aware of, it's not this week, it's actually next week. at the end of CPI, at the end of PPI, at the end of core retail sales, all this other stuff that's going on, look out for February 21st because NVIDIA is reporting earnings again. And they're expected to do better than they have in the last two, which the last two sent them from a $300 stock per share to a $721 stock per share. Meta's also got Meta's also got dividends coming out, all this other good things. All of these things lead me to believe that we're in a .com like bubble from 1995 to about 2000. Go look at what happened to the chart from 95 to 2000, and you'll understand that this may not be the end, but this could be the beginning of the ultimate bull run that we haven't seen in quite some time. So I'll leave it right there with my conspiracy theory. I'll go a little bit more in depth with the Discord. If you're interested in joining, like I said, the link is in the description down below. Please hit that like and subscribe bell. From the Trader Shop, my name is T. Hobbs, and we'll